So Zoom just reported their Q4 earnings, and their stock immediately saw a huge jump in price, followed by the stock dropping down again over the following day. At the same time, every news source seems to be proclaiming why Zoom's amazing earnings sent the stock price soaring. So clearly there's some mixed signals here. Hey everyone, and welcome to FinTech, and in this video I'm going to be analyzing Zoom in light of their most recent earnings report, going over their background as a company, looking at the actual earnings they just reported, and finally offering my opinion on what I think this portends for the future of Zoom. Lastly, stick around till the end of the video to see whether or not I personally decide to buy or sell shares in Zoom. Zoom was founded in 2011 by Eric Yuan, a former corporate vice president of Cisco WebEx. He left Cisco in April of 2011 along with 40 engineers with the goal of building a product that better addressed the needs of the customers that he was seeing. Interestingly enough, the company actually struggled to find investors early on because people thought the video market was already saturated. But eventually Zoom did manage to find investors, and after a year it launched to the public. Once Zoom's product hit the market, they immediately took off, signing on 500,000 customers in the first 5 months and signing on 1 million customers just 4 months later. This rapid growth would characterize Zoom's future. Zoom IPO'd in 2019, and the shares immediately soared 91% in value. After that, their stock price pretty much stalled while the company struggled to build up a large enough revenue base to justify this ridiculously high stock price. But over time, they started to gain ground by continuing to build best-in-class products that their customers preferred over any of their competitors. Zoom at the time drew a lot of comparisons to Apple with a product that just worked. Their growth continued at a high but steady pace until in 2020 everything changed. In early 2020, almost exactly 1 year before I'm filming this current video, almost the entire country and world shut down at the same time. Workers who were able to move to a remote working environment. Schools either let out early or switched to online learning. In this environment, Zoom quickly rose to the top as the dominant video conferencing platform for consumers. It became a part of the popular culture, with people joining Zoom calls as their primary form of social interaction. This led to Zoom's stock price exploding, basically doubling in a matter of months. At the time, a lot of people thought that Zoom was overvalued and that once they reported their next earnings, the stock price would drop back to reality. Instead, Zoom reported 2 quarters of some of the best performance I've ever seen from a company, growing 169% in Q1 and 355% in Q2 in terms of revenue. This incredible performance caused the stock price to double once again. In hindsight, it's abundantly clear that people working from home hugely pushed Zoom forward and essentially took several years of growth and made it all happen in the matter of a couple of months. After that, however, the stock price stalled once again. With risks of the world opening back up and people abandoning their Zoom subscriptions once they can meet people face to face, the stock price started dropping in anticipation of their Q3 earnings. Well, this anticipation turned out to be correct. While the earnings were good, they were nothing compared to how they'd performed in the last 2 quarters, and in Q4 they forecast that they were only going to grow 3.7% sequentially, when in the past they'd been growing almost 100% in a quarter. Now, in my last video, I talked about this forecast and I told you why I thought it was sandbagging, and it turns out that that was pretty much correct. But even so, I sold around 1/3 of my Zoom position based both on that guidance as well as some of the risk that I saw from Zoom in the future. So that was all last quarter, but now let's look at this most recent quarter's earnings results to see how Zoom has actually performed over those 3 months. For this section, I looked at Zoom's earnings as well as read their entire earnings call transcript, which took quite a bit of time. So if you appreciate that kind of effort, please just hit the like button. It only takes a second and it makes me feel like it was all worth it. First off, looking at the entire fiscal year 2021 as a whole, Zoom obviously crushed it. Revenue grew 326% for a total of $2.7 billion for the year, and they actually exited the year at an annualized rate of $3.5 billion. They grew their non-GAAP operating margin to 37.1%, up from just 14.2% in fiscal year 2020. They also grew their free cash flow 12 times to $1.4 billion for the fiscal year. But while this performance is obviously impressive, a lot of that growth took place in the first half of the year. So let's look now at just their latest quarter, Q4 2021. In their most recent earnings report, Zoom grew their revenue to $882.5 million for the quarter, an increase of 369% year over year. Now, while that number looks spectacular, and it is, it can be a little bit misleading since a lot of that growth did take place in the first 2 quarters of the year. If we instead look at just how much they've grown in the last 3 months, they've grown 13.5% quarter over quarter. If they were to continue this for an entire year, that would annualize to a growth rate rate of 66.2% year over year. I think this is a better representation of their growth at this point in time. Their actual growth rate was substantially higher than their estimated quarter-over-quarter growth rate of 3.7%, and even beats my own estimate of around 8% quarter-over-quarter. Their CEO attributes this beat to both strong marketing and sales execution, as well as a lower than expected churn rate with customers leaving their platform over the past couple months. They now have 467,000 customers with over 10 employees and added 33,000 just in the last quarter, with 385,000 added over the course of the fiscal year. In Q4, customers with over 10 employees represented around 63% of the total revenue of the company. They also now have 1,644 customers who generate over $100,000 in trailing 12 months earnings, up 156% year over year and up 28% quarter over quarter. This is an increase of 365 large customers just in the last quarter, which is the largest sequential number of new customers they've gained in this bracket ever. And while this growth is extremely impressive, CEO Eric Yuan also notes that this only represents 14% of the global 2,000 largest companies. Zoom's plan for grabbing more of these customers is to continue improving their products and to expand more internationally by building infrastructure abroad. Their dollar-based net expansion rate for customers with 10 or more employees was 130% for the 11th consecutive quarter because customers continue to sign on for new features. Basically, every year, customers spend $1.30 for every $1 they spent last year. We'll talk a little bit later about what new products these customers are buying, including Zoom Phone, which is their largest new product line. Revenues in the Americas grew 292% year over year, and the revenue from APAC as well as EMEA countries grew 687% year over year. Revenues from these countries now make up 33% of Zoom's total revenue, whereas back in 2020, it only represented 20%. On their earnings call, Zoom also noted that in fiscal year 2022, growing this market is going to be a huge focus of their efforts as they try to grab more customers abroad. Non-GAAP gross margins in this quarter were 71.3%, up from 68.2% last quarter. Now this is very high for a traditional company, but it's actually lower than Zoom has had in the past. This is because Zoom has continued to support free K-12 education, and they plan to continue doing so for the near future. Research and development expenses grew by 91% this quarter, and their sales and marketing expenses also increased 90% to now represent $159 million. Their non-GAAP operating income was $361 million this quarter, which far exceeded their guidance. This translates to a 40.9% non-GAAP operating margin for the quarter, which is a substantial improvement from the 20.4% that they had a year ago. And it's also a steady improvement from the 37.4% that they showed just last quarter in Q3. Now, one interesting thing to note is that Zoom's RPOs have increased. These are their remaining performance obligations, which basically represent any deferred revenue or backlog that they have. But they also expect to recognize around 70% of these RPOs over the next 12 months, while in the past they've only recognized 62% over a 12-month period. This may make their comparable revenue look a little bit higher than it was in the past. So the story is still the same as last quarter. Zoom is still growing basically the same amount that they were back in Q3, and there hasn't really been a major slowdown. There's no major cause for alarm as their numbers do still look good, even as some countries have started to loosen their working from home restrictions. That being said, one of the big opportunities I noted for Zoom in their last quarter was launching new products to their existing customers, especially Zoom Phone. Now, while there weren't really any solid numbers on Zoom Phone last quarter, we do have those numbers now. First off, Zoom Phone has shown some serious promise among some large Zoom customers. USC, for example, the University of Southern California, signed on 21,000 seats for Zoom Phone. Similarly, Universal Music Group is using Zoom Phone along with their existing Zoom products to deploy to their global workforce. They will actually be using Zoom United, which provides a one-touch experience for chat, video, and voice. And this really reflects Zoom's shift from just a video conferencing app to a unified communications as a service, where Zoom will try to handle all aspects of a company's communications. Eric Yuan called out Zoom Phone as their fastest growing product line last quarter, and they expect that growth to continue as they cross-sell to their existing customers. They closed out fiscal year 21 with approximately 10,700 customers using Zoom Phone who had 10 or more employees, which was up 269% year over year. Zoom Phone also finished fiscal year 21 with 18 customers who had over 10,000 seats on the platform, showing that this is a good proof of concept for supporting both small businesses as well as enterprise scale businesses. Now, while this is a good start, it's obviously just a tiny portion of their overall user base of over 467,000 customers, but it is still good news for the future. The CEO has noticed that they've seen a lot of customers transitioning from just the video conferencing app to using Zoom Phone as well, and they've been very happy with those results, which shows that this is their primary pipeline for growing this product. Their CFO also noticed that the total addressable market for telephony by 2024 is estimated to reach $23 billion. Finally, in addition to selling to existing customers, the CEO noted that international growth could also be a large catalyst for Zoom Phone. So what do I think of Zoom going forward? Well, so far they seem to be basically following the path that I outlined in my last video. They are aggressively investing in international growth, and they are also ramping up their R&D expenses. They are building new products such as Zoom Phone, which is actually launched to the public now, as well as improving their still in development products such as On Zoom, which is currently in its beta phase. The company estimates that their next quarter revenues will be in the range of $900 million to $905 million. This would represent a quarter-over-quarter growth rate of only 2.3%, which is even more conservative than they were last quarter. Now again, I do think that this is very conservative and sandbagging, and they're probably going to beat this by a pretty substantial amount. At the same time, I think it is a little bit concerning that Zoom keeps forecasting for these extremely conservative growth rates. Almost like they're expecting a slowdown to happen at some point, but they're not exactly sure when. It didn't happen last quarter, it might not happen next quarter or even the quarter after that, but what about the quarter after that? This video is too long to go over all the risks that Zoom is going to face in the near future, but I did cover those in detail in my last video. They estimate their non-GAAP operating income to be in the range of $295 million to $300 million. This would actually be a decrease quarter over quarter from what they reported this quarter. This was explained by both their investments in international growth as well as additional sales and marketing expenses from trying to push Zoom Phone out to a wider audience. One new area of concern, which I actually didn't have before the earnings call, was competition. One analyst on the call asked Eric Yuan what he thought about new competition from Microsoft offering Microsoft Teams for free to their existing bundled customers. The CEO responded that customers are going to want the best platform even if they have to pay a little bit of money for it, which seems reasonable to me. He then went on to say that CIOs and CTOs probably aren't going to want to stick to one video platform when there is a risk of outages on that platform, so they'll probably go with at least two. That seems like a strange thing to say to me, and it made me a little bit concerned that Juan didn't think that Zoom could compete with Teams in an enterprise environment where it was being offered for free. Luckily, he did clarify, saying that 44% of Microsoft 365 customers also used Zoom, and that the video market wasn't going to be a market where we would see one big winner take over everything, and that at the end of the day, there would probably always be several big players vying for different parts of the market, and Zoom would just have to be one of these. I didn't make any sales or additions to Zoom in the last quarter because I think all of the risks that I talked about in my previous video are still there, and my focus is really just going to be on watching Zoom and waiting to see if these risks or opportunities start to play out on a larger scale. So let me know what you've done with Zoom. Don't forget to like and subscribe if you enjoyed the video, and I'll see you next time.